Guys, to another day of our market briefing. Today is the 29th of January, 2024. And of course, we are here to talk about the financial markets. That's the capital currency market. We're here to look at what has been happening and of course, what is happening and what should happen, right? As usual, you already know what we normally do. We ensure that we check the calendar first of all before we start to check on charts and find out what's going on based on the technical analysis. So we always say, guys, head over to your calendar, and we normally use the calendar from Forex Factory. We've been using it for years, and we're very, very confident with the data that they have been producing up till date, right? And when I say we've been using them for years, we've been using them for more than 10 years, right? Great. So here is the calendar for the week, which is January 28th to February 3rd. February 3rd. This simply means that we are most likely going to have a non-farm payroll this week. Non-farm payroll, NFP, is key economic indicator to the US based on the unemployment, right? Now, if you look, as usual, we always ensure that our impact is only on the high. As you can see, putting the mouse there, it says what? It says high impact expected, and that's color red. So we only pay attention to the high impact expected because these are the news that can move the market. So Monday, January 29th, today, we do not have any high impact market today. So most likely the market might be a bit quiet. Now, by the way, in our previous market briefing videos update, we've been saying that the market has been ranging for a while. And yes, indeed, it has been ranging for about 2 weeks now, right? And then the news that we have scheduled for this week should do some good movement. We should have some fresh volatility that should come in. On Tuesday, tomorrow, January 30th, we have the consumer confidence and the job openings, and that is for the USD. Remember, we focus majorly on the dollar-denominated pairs. Those are the major currency pairs: Euro USD, Pound USD, AD USD, NZD USD, and the rest of them, including gold, the shiny metal. Apart from Tuesday, Wednesday, January 31st, we have the big one, and that is the FOMC statement, right? FOMC, Federal Open Market Committee, very key. It tends to come with its own fresh volatility. So you need to be aware of what will happen during this period. The spread most definitely is going to increase for most brokers. Some broker spread might most likely increase more than some others. I don't know which one is which, but just make sure you pay attention because you are going to be paying more if you place trades around that period. Also, you will have the likes of whipsaws where, based on some confusion, the market is going up and down. Whipsaws in the market. You have slippage where your penny orders do not trigger where you set them, but they trigger at another price based on the high volatility of the market. And that is very dangerous. If you check the video, one of the videos in this our YouTube channel, we talked about slippage, and then it will help you to understand much better. And of course, protect yourself accordingly, right? And then look, Thursday, we have more news for the dollar by 2:30 West African time and then 1600 West African time. And Friday, we said Friday, February 2nd, first Friday of the month of February. And we have what? We have the non-farm payroll. Has to do with unemployment. This is also bound to be explosive in the market. So this week, there's a lot in the market for the USD. So we should expect some serious movement in the USD space. And then we'll cross over to the charts. Now we can check the charts and see what the market has been doing based on the technicals. Don't forget, it's always key, very important for us to combine the fundamentals and the technicals together. The first thing that jumps at me, or should I say the second thing that jumps at me, is this sideways action, this movement between these two areas here of resistance and also support. You can see it has failed to break and stay above, failed to break and stay below. And of course, the first thing that actually jumped at me was the trend, meaning that it's pushing higher. And if you check your DXY, you see that for this year, the month of January, it has been bullish, right? And of course, that could give us some clues heading into February and maybe even for the rest of the year. This might as well be the pace for the year, and then the dollar index might be bullish throughout the year. But based on what we can see now from the H1 1 hour time frame perspective, the market is ranging and now it is presently at the area of resistance. You need to be careful. Don't forget, Monday, we don't have any key market in news coming out. So we may not have volatility in the market, so it might as well just move sideways, right? But anything can happen in the market, and that's my motto. Be prepared for anything in the market. And this is the dollar index ranging here. If you look at the orders from last week, we had some break-even trades because we didn't have a clear runner. We're expecting it to run and break levels, but it never did. It had another thing planned out for us, right? Euro USD sideways market, as you can see, but don't forget, USD index, the dollar index, the DXY tend to move in opposite directions to the Euro USD. This is pushing higher, and then the Euro USD, you can see, has been pushing lower for the year January 2024, for the month January, and for this year 2024. So far, so good. And then if you check other instruments, you see Euro USD and USD CHF also tend to be in the opposite direction. They are like brothers and sisters, if you ask me. Euro USD is dropping and more or less at the area of support. USD CHF is also appreciating, but then it's also at the area of support over here. So we need to be careful with the two of them. It's not all the time. It's not 100% of the time that they move in tangent. We have gold. Gold is dirty. If you look at most of the instruments that we have here, they are pretty much dirty. GBP, JPY, we had this one on a request from a trader. You can see ever since like the 17th of January, which is approximately 2 weeks now, it has been moving sideways, making a whole lot of mess over here. So whatever instrument you're looking at, you would always understand what the market is trying to tell you when you start identifying the trend, identifying who is in charge of that trend, and then where they want to do their thing. And then that will help you gradually to know where the opposite players also want to. This is an uptrend. You can see we've marked out our areas here where we want to buy. This is a key area that is uh, that would most likely have confluence. Just looking at it, I'm sure this has confluence with the Fibonacci retracement. We tend to add Fibonacci retracement into the mix as well. So if I quickly draw the Fibonacci from the lows over here to the highs, you see, bingo, it has confluence with what? Confluence with the 61.8 area. So this would most likely be a good area to look for buy positions to take it back up to the highs over here. But then only time will tell. The market has been struggling, has been ranging, consolidating, moving sideways. Anyhow you want to say it's equilibrium, it is still the same thing. So all we have to do now is to wait for the market to pick up better, and then we follow the trend, right? I'm going to be rounding up here. As usual, if you have any questions, feel free to comment below. Thank you to those that are back again to the channel. And if you are new to the channel, don't forget to hit the subscribe button, turn on the notification bell. If you have any question whatsoever, leave your question in the comments area and we will get back to you in good time, right? And then of course, you want to learn more about the business, you can always head over to the school. We have a training school now. You can always head over to the training school where you can get more information. Free webinar over here, you can watch it to learn more. You don't have a demo account, open it. We tend to run weekend first classes. We had one this weekend that just passed, Saturday and Sunday. And of course, we'll have more as we continue. Okay, thank you. Okay, sorry, we had on Sunday alone. I just remembered it was last week that we had Saturday and Sunday. We had just yesterday, Sunday alone, right? So we'll have more things coming up for everybody. Have any questions, feel free to ask. Guys, make sure to trade safely this week. There's high impact news coming out. Nobody should crash an account. The feeling of crashing an account is not a good one. And if you have, you would understand exactly what I'm talking about. So protect your account, guys. Make sure you use stop loss and use the proper risk management, volume, lot size based on your account balance. Thank you guys. Chat you up soon and goodbye for now. Cheers.